Hey traders, checking in on the stock market today. Slow grind up continues for the SPY bulls. Higher low every day keeps going. And that's because QQQ and XLF are trading inverse to each other again this week, helping that slow grind perpetuate. Individual names had a lot of volatility. We had some nice equilibriums to start the day. Let's look at it all on the charts. So we got SPY higher low every single day, 7 days in a row now. If we break 427.13, that pattern will break. Not going to anticipate a dump unless we see all of our major sectors at the low of the day at the same time. Can't remember the last time that's happened. When it happens, it'll stand out to us absolutely. But we'll just be looking for a SPY daily higher low. The relationship between QQQ and XLF for the past couple weeks has been inverse. Last week, in response to the very weak close on, I believe it was after quad witching and after the FOMC, ended the week very weak. And then we started last week with just this bounce taking place, and that inverse relationship was the weakest that it has been in a while. Now this week, the last 2 days, it's right back to that inverse relationship being extremely strong. So it was almost tick for tick today, where if QQQ was consolidating, XLF was trying to bounce and vice versa. So the NASDAQ futures chart, 4-hour bull flag to start the day, confirming with follow through. QQQ all-time highs continue. Most things were flat on my screen today. Nothing really stood out as far as growth and tech. Tech was down and flat, but Apple bulls really stood out. And it's almost like Apple was doing all of the heavy lifting for QQQ to be green today. And if you just go through all the other tech names, that's Apple. We got Google was in the red. Facebook consolidation day. Netflix break even essentially. Amazon slightly green. So really it was Apple that stood out for the bulls. I like Google bearish if we see any broader market weakness. This to me is a tired chart. All-time highs. Look at us just trading sideways here. It's like they're just waiting for the bears to show up so we can see weekly consolidation, which has not happened in 7 weeks. So if, it's a big if, and there's plenty of bearish setups as far as patterns that see zero follow through and end up breaking bull because the broader market is so strong. NIO is another perfect example. NIO was a clear daily head and shoulders. Broader market saw no weakness. Anybody that was playing for a head and shoulders got squeezed out the last 2 days. Google could be the same. If the broader market keeps grinding higher, maybe anybody that shorted Google in the last 3 weeks with no upside price movement, maybe there's a quick move to squeeze everybody out. But if SPY loses the pattern of a higher low every day and starts some consolidation, I'm looking for Google to be one of the weaker tech names in the short term. IWM, double bottom with the low of yesterday. Still scouting a daily higher low, still a potential bull flag at this point. If we see a bear break of 228.77, odds of a daily bull flag will decrease a good bit, as we will then at that point be scouting an equilibrium to be the more likely scenario. But overall, still healthy consolidation on the daily at this point. XLF, double top with the high of this bounce by a penny. And now we're back to the low of consolidation, which is still minimal, but we're looking for the daily higher low now. Anything above 35.18 is a daily higher low. Bulls have to prove the trend change for a weekly higher low to convincingly be set. Healthcare, all-time high, but still rejecting from this resistance. I haven't moved this line. Oftentimes I'll have to tweak a line here and there on wedges or trends. Not this chart. I haven't touched it in over a week, and we keep rejecting from it. But we'll just be looking for a daily higher low, anything above 123.20 the next time we pull back. XLV helped the broader market bulls today. And again, it's usually a floater as far as QQQ is up, XLF is down, or vice versa, and XLV joins Team Bull or Team Bear. And obviously recently it's been joining Team Bull a lot more. XBI, gap up for profit taking yesterday, and a lot of bear follow through from that. We are looking for a daily higher low compared to 131.89. Hourly RSI getting to oversold conditions. If we see weakness tomorrow, I'll start to get interested in looking for a daily higher low. And the bulls will have to set up an hourly trend change back in their favor for a daily higher low to be shaping up. But all profit taking 2 days in a row now. SMH, all bulls. So the weekly time frame rejected from resistance, formed a little bull flag, and is now breaking out to all-time highs with convincing follow-through. It was NVDA held up again today. It was NVDA yesterday, AMD standing out today as a lead semiconductor bull. It broke key 8920 resistance. SMH benefiting. And bulls have tons of space for a daily higher low to form on SMH next time we consolidate. Solar sector, we have not pulled back in 6 days. We're definitely extended in the short term. That's a bearish reversal candle on the daily. 16% move for the entire sector in 6 days is pretty wild. When I was first learning technical analysis, I used to do everything based off of one candle. I'd look at a daily chart and I'd say that's a bearish reversal candle and I would act on it. But then I learned you can zoom in and get a lot more information. This daily candle can be the exact same while still in an hourly uptrend or having just lost the hourly higher lows. And you don't have that information unless you do zoom in. Not all daily candles are created equal because what's going on zoomed in makes the difference. Aggressive bears are scouting an hourly lower high compared to 93.49 tomorrow. And then they want to see a confirmed hourly downtrend to lead to daily consolidation. Starting to keep an eye out. High volume up near the top has us watching for a temporary climax. But again, tons of space for a daily higher low to form. And at this point, a massive bounce off of our monthly higher low. It doesn't look like much, but that move is 50% plus. No, it's not. 38%. I don't know where I got that number from. Still impressive. 38% in 6 weeks. Need more if it's going to be 50%. MSOs, daily consolidation started. Again, we have not confirmed a daily trend change at any point since the all-time high. Now's the time for the bulls to prove it. Set a daily higher low, break 40.62, and then we're looking at 42.06 from there. Have to prove it with follow-through. Look at the daily EMA 12.26 here. Failed across, failed across, failed across. Can we finally confirm a bull cross? Stay tuned. I do still have a position. I'm giving the bulls a chance to confirm the trend change. The VIX. So again, you look at the VIX and say, why is the VIX going up while everything else is going up? And a lot of people like to look at this and say, it means a crash is coming. When in reality, it means people are hedging, knowing that broader market consolidation is due. They like where their portfolios are at. So they grab a little bit of the volatility sector for when that daily consolidation that is inevitable takes place. So we have a low here, 14.19, 14.10. If we get over 16.46, we'll be looking at some follow through. But again, I'm looking for all major sectors at the low of the day at the same time to tell me that there is broader market notable weakness. I'm not looking at the volatility sector to tell me that. The dollar, daily higher low set, making our way back up towards 92.41 resistance. I'm watching for a lower high here and a tightening range. That's just more of a gut feel. We can easily see a continuation move, so I'm not putting too much weight into it. But we have the metals already confirming bear breaks. And if it's going to be a bear break with a lack of follow through, we'll be watching for the dollar to lose the 4-hour higher lows and potentially fail 92.41 resistance on the initial attempt. So gold daily bear flag confirmed, lack of follow through, but we're only going to call it a lack of follow through if the bulls can confirm a 4-hour trend change back in their favor from here. Otherwise, it's just cooling off RSI and can see another leg down very easily. So metals still weak. Silver did not break support. It did, but it's a double bottom. So silver is still within its range sideways, while gold is weaker. And again, the miners broke bear yesterday. The metals followed about 20 to 22 hours later. This is the second time in the last 3 weeks that the miners have broken support before the metals did. Oil. Tightening range, hourly time frame. Solid bounce off the daily EMA 12 support. Higher low. Anything under 73.81 would be a lower high and continued tightening range. There's our daily EMA 12, which has held the last 4 tests over the last month. Bulls are in complete control as long as that EMA is support. Natural gas, potential blow off top, beautiful follow through overall, but we see the big volume spike, we see the big upper wick of profit taking. So on this current 4-hour pullback, aggressive bears are going to be watching for a 4-hour lower high to be the result of the next bounce. And we would have to confirm a 4-hour downtrend and lose the EMA 12 for the first time in 7 days if we're going to start daily consolidation. So daily consolidation won't surprise us. We just saw a monster move over the last 6 days of 20%. Plenty of space for a daily higher low to form next time we consolidate. So we're just watching the pattern, higher low every day. And again, this grind keeps up because of the inverse relationship between our sectors, our major sectors of QQQ and XLF. Trading today, we had a lot of great equilibriums shaping up. And the equilibriums, the break of these equilibriums was not ideal as far as follow through, but the forming of the equilibriums is where the trades were to be had. So I'm just talking about this right here. This is NIO, Tesla, 5-minute did it, ARKK did it on the 5-minute time frame. Who else? There's a bunch of names that did it. I'm drawing a blank now. So I just took a trade here looking for a 5-minute lower high. I could have played off the low of the day. I wasn't watching it at that point in time, so didn't take that bottom fish, but it was a nice bounce. And then I just watched this pattern, and look at the pattern of a lower high each candle. As soon as that pattern breaks, 49.12, if you use that as a bull signal and put your stop under the low at that point, big follow through. As soon as the pattern of a higher low every 5-minute candle breaks, if you short, solid bear follow through. I shorted NIO for this lower high, and I was using the pattern of a higher low every 2-minute candle as my guide. So not initially on the bounce. We saw a little 1 penny break here, but we got to this point. I said, all right, I'm looking for a 5-minute lower high, and when we break the pattern of a higher low every 2-minute candle, I am going to short it and put my stop over the high. So 49.74 breaks, I'm short, stop over the high, I don't stop out, and then I just scaled out as I exited, anticipating a 5-minute higher low would then happen. So there was opportunity in both directions, and it was a really nice equilibrium. That candle pattern won't work every time, but I use it all the time for my signals. Facebook yesterday, news, and a breakout to all-time highs. I was watching the breakout. I was about to end the day live streaming. I said, all right, I'll take one more trade here. I'm watching the pattern of a higher low every 1-minute candle. As soon as it breaks, I short and I put my stop over the high. Shorted it on the break of 354.57, and there's 1% of follow through in 5 minutes. It's obviously not going to work every time, which is why you put your stop right above that level in case it's a 1-minute bull flag and you don't want to get stuck in a short squeeze. But it just shows the slightest shift in momentum. It happens on all kinds of time frames. SPY on the daily. If I want to be if I am a hedging bull or an aggressive bear on SPY, as soon as the pattern of a higher low every single day breaks, I short and I put my stop over the high at that point. So for this pattern, for this trade style, there's a number of things that need to align. Number one, I want the most likely scenario on the longer term time frame to be aligning with what I'm looking for. What I mean by that is NIO. I'm scouting a lower high on the 5-minute time frame, so I take a loss of the higher low every 2-minute candle short because I'm scouting that 5-minute lower high. You want to see it with a number of candles. You don't want to just see 3 candles in a row and you're going to use that pattern. You want to see 8, 9, 10 candles in a row for that pattern to really be standing out to you. Play around with it. A lot of people with this pattern use I don't even know how to say it. I've read this word 100 times, but I've never said it. Heiken Ashi candles, and these are based on price levels, not time going by here. But you can see they happen a lot more as far as just clear patterns. Break the pattern of a lower high every candle, and that marks the low of the day. I don't use these candles. I don't have a reason to change the strategy of how I do things. Maybe someday I will. All right. Decent little day. Other than that, we will see you tomorrow. Have a good rest of your day. Do good things. Got a greedy squirrel. Alright, bud, chill out.